Welcome to my channel. In this class, we are going to discuss a problem on cash flows from operating activities. Here, some information is given. There is the statement of profit and loss for the year ended 31st March 2020. Then there is note to accounts explaining this. Here it is other income is given. So what are the items that is coming under other income? Then depreciation amortization expenses, the items coming under the head. Then other expenses. Then some additional information is also given. So before moving on to the cash flows, or before preparing the cash flows from operating activities, you have to find out certain items. So the first item that is coming under the cash flows from operating activities is net profit before taxation and extraordinary items that we have discussed in the previous class. So first of all, we have to find that one. We have to make a working note. Then we have to write a heading, net profit before tax and extraordinary items. Here, the first item will be net profit after tax. That is given in the profit and loss account. The net profit after tax, this figure, that is 12,000. The amount of taxation is 8,000. You have to keep it in mind. Then coming to our notes, then the net profit after tax is 12,000 as we have found out. Then the provision for taxation made, as I have shown it, that is 8,000. By adding these two, we get the 20,000. That will be the amount before tax. Then there is an income tax refund. The tax, income tax that is paid is refunded. There is an amount that is given there. Here it is, the income tax refund, that is 3,000. We have to cut, or we have to reduce that amount to arrive at the net profit before tax and extraordinary items. So 3,000 we have to minus it. So 20,000 minus 3,000 will be 17,000. Then we have to prepare the income tax paid during the year has been ascertained by preparing the provision for taxation account. So we have to write the heading provision for taxation account. Then the format of account is given. Then it has a credit balance. Provision for taxation account has a credit balance brought down. We have to I will show you the amount given. There is the provision for taxation. Previous year is 10,000. This year it is, that is the closing figure is 13,000. So the 10,000 previous year amount will be the balance brought down, that is 10,000. Then closing balance 13,000. Then there is a statement of profit and loss. The amount of taxation is given in the statement of profit and loss. We have to, I will show that. The provision of for taxation, that is 8,000. So by adding here, the credit side is greater, 18,000. So 18,000 minus 13,000, that is 5,000. That will be the income tax paid during the year. So all the calculations are made. Then we can move on to preparing the cash flows from operating activities. So we have to write the heading cash flows from operating activities. The format I have discussed in the previous class. The first item is net profit before taxation and extraordinary items. That is 17,000. Then we have to add certain items. That is the adjustment for non-cash and non-operating expenses items. Then depreciation. It is given in the question. That is 5,000. Here it is 5,000. Then the amortization, that is 2000. Then loss on sale of equipment, here it is 3000. So by totaling the amount, it will be 27,000. By totaling all these amounts, we get the amount that is 27,000. So there is also a profit on sale of machinery given. So that one we have to reduce from the 27,000. Profit on sale of machinery given here. We have to reduce that amount from the 27,000 amount. Then the resulting amount, that is 25,000, will be the operating profit before the working capital changes. Then we have to make some adjustments for the working capital changes. That is, we have to add certain items. The first item is decrease in inventories. Here it is. Previous year it is 25,000. This year it is 22,000. So there is a decrease of inventory amounting 3,000. Then decrease in rent payable 5,000. Here in the question, so there is a decrease in rent payable 5, but in the question it is given as increase. So this 2,500 will be written here. There is a mistake in the question, then, and this 2,000 will be written here. So hence there is a decrease in rent payable will be 500. Then increase in trade payable. Trade payable will be, increase in trade payable will be added. That is the 4,000 amount by 25,000 minus 21,000. So by adding these all items, we get the amount 32,500. Then we have a increase in trade receivable that we have to reduce. That is 21,000 minus 15,000. That is 6,000. So by reducing 32,500, 6,000 from 32,500, we get the amount as 26,500. That will be the cash generated from operation. Then there is an income tax paid that we have calculated. That is in the by making the provision for taxation account. That is the 5,000. This amount is the calculated figure, that is the income tax paid during the year. Then we have to reduce. Then income tax refund. I have already shown that we have to add 3,000. So 26,500 minus 5,000 plus 3,000. The net amount will be 24,500. That will be the net cash inflows from operating activities. So that's all for today. Thank you.